Hello viewers, we'll be going over silver futures. In this video, we'll be going over the day-by-day probability model, the percent comparison, how we find the models, and the day-by-day forecast for silver. So back to the technical analysis. Today we're down around 70 basis points on the 1 hour chart. We start to see a slight convergence in play on the 1 hour chart, and we're still on positive MACD. If we expand out further to the 4 hour chart, we're currently overbought on the 4 hour RSI, and we start to see a divergence on the 4 hour MACD. And if we expand out further to the daily chart, we were oversold last week, and we see a nice reversal in play, and we also have a convergence on the daily MACD. Right now we will encounter resistance on the 18-day moving average, and if we expand out to see resistance, past resistance, we see that around that price range we see previous support that dated back to March 27, 2019, around the price of $14.90. That also coincides with the 18-day moving average, this purple line. And as for support, if we do reverse and head down lower, the next support that I see will be the 9-day moving average, this blue line, which is around the price of $13.24. And if we were to move up higher, that price movement is only roughly around 1.5% to the upside, and to the downside it is around 10% to head back to the 9-day moving average support. So let's head back to the day-by-day probability model. Again, this model is now available in the link below, so do check it out. So as the days progress to the 7th day, we have a 31% chance for silver to climb higher between 0 and 10%. On the other hand, we have a 62% chance for silver to fall between 0 and negative 10%. And on the extreme case, we have an 8% chance for silver to fall between negative 20% and negative 31%. So let's head to where silver will head to in the next coming days. So what we have here is 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is the best match to the current trend. Right here we have the current trend, and below is the trend that I believe is the best match. This trend dates back to April 7th, 2006 to July 5th, 2006. So let me point out why these two charts are similar. So what we have here in the current trend, we start off at the upper Bollinger Band, and afterwards we proceeded to average lower to touch the bottom Bollinger Band. And after touching the bottom Bollinger Band, we see a reversion to the mean to hit back nearing the middle Bollinger Band. So we have those points there. And in the trend in question, if we examine the trend in question, we also start off at the upper Bollinger Band, and we touch the upper Bollinger Band, proceeded lower, and touch the bottom Bollinger Band, and then finally we have it revert back to the mean at this instance. And one thing to consider, that this trend is more forward looking or ahead of the current trend. Right here we do not have the candles at the middle Bollinger Band yet, so do take that in consideration. And what we have here is 1, 2, 3 points. We also have 1, 2, 3 points, so there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the model that we just examined was April 7th, 2006 to July 5th, 2006. Back then, silver was up around 90 basis points. So if we look back at the day-by-day probability model, it coincides with this standard deviation, around 31% chance for silver to climb between 0 and 10% in the next coming days. And if we examine further in the technical comparison on the current trend, so if we organize to the current trend, let's just see if we can find it. The current trend we have here is down 28% from monthly high, up 21% from monthly low, up 13% from 10 simple moving average, down 7 basis points from 20 simple moving average, and down 11% from 50 simple moving average. So the trend that we examined was down 31% from monthly high, up 15% from monthly low, up 8% from 8% higher from 10 simple moving average, 8% higher from 20 simple moving average, and 6% lower from 50 simple moving average. So there's slight similarities in the technical performance for silver back then. And again, this model is now available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.